Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we'll look at the balance sheet. The objective is to be able to identify a balance sheet and get some understanding of its composition and computations. Now, the source of figures on the trial balance are various. Let's have a look at the list. Probably one of them. Okay, the figures should agree with what we have on the notes to financial statements. That's one. Notes to financial statements. Then we have the final trial balance. It should have the same figures. And then we look at the summary reports regarding assets, liabilities, and equity accounts. So in terms of assets, we start all the way from fixed assets there. But remember, following the cash accounting method for small businesses, fixed assets which are used for up to 2 years can be written off in the year of purchase. So in our demo, we don't have fixed assets at all. And then, of course, we've got stock accounts. We've got bank accounts summary and the supporting reports. We've got cash summaries and the supporting reports. We've got trade creditors, long-term liabilities, other current liabilities, and then equity and tax reports. So all those should agree with what finally ends up on report C1, final trial balance, and the notes to financial statements. So directly or indirectly, they are supporting each other and there should be no conflict in terms of figures. So let's get to our device. Now let's go to module 2. This is our module 2 here, and in module 2 we are interested in the mini year-end reports checklist. Now here we're going to start with B2. Let's start with C3, where the balances should come from. So let's click on C3 and actually copy those final balances, because we need to verify with a quick direct access. So we're going to take a quick snapshot. Now we need this one on top. We're going to take a quick snapshot of these final balances. Now remember, the balances affecting the balance sheet start from 201 in this particular case. Anything above that doesn't apply to the balance sheet, so we shall take only that portion. Whatever is above that applies to the profit and loss account. So let's copy that and we paste it here. We're going to use it for reference and support purposes to verify if what we're talking about is true and correct. So now we go back to our device. We now look at the balance sheet. Now we need to drag this to the left. Okay, go back to our device. There we are. So this is C1. Like you can see, we've taken balances from account 201 up to account 286. 201 to 286. Now let's go back and now address the balance sheet itself. This is the balance sheet. This is the balance sheet. Basically, it's a list of assets, liabilities, and owner's equity. Owner's equity at a particular point in time. In this case, we're looking at the final balance sheet. There are monthly and quarterly balance sheets. We even have an opening balance sheet, but this is the very final balance sheet for the financial year after the year-end adjustments have been made. Okay, it's after those year-end adjustments that we have the 1,500. It's part of the year-end adjustments, if you recall what we covered in section 35 and 36. So that is the 1500 there. The 4364 is there. The 477 is the cash balance. Now the 30 is trade creditors. Now these are the current liabilities. Is just hold on 340. Where's the 340? Loans and hire purchase. Loans and hire purchase is not appearing here. What could be the explanation for that? We need to look at the notes. That 400 there. Let's see. Oh, that 400 is below here. Okay. Now the 2324 is a sum. Wait. This 2324. Okay, the 12,000 is here. 2880 is there. Now we've got the 14403 coming from the profit and loss account, and then we have that 400 there. That 2324 is an opening capital there. And then let's see, 2880 appears there. Now loans and hire purchase, the 340. Oh yes, the 340 is up there. Yes, the 340 is up there. Now what about this 844? Now that 844 is what we don't recall correctly. Let's get back to this report very quickly. That's to 844. We should be able to account for each and every. Now let's see, that 340, that 340 is there. Now let's look at note 6 here. Yes. Yeah, that 844 plus the 2880 should give us that 3724. That's right. Gives us that 3724. Got it right. Got it right. So we are saying that the balances on the balance sheet come from the final trial balance plus individual notes and group notes. Let's look at note 19. What is on note 19? This is basically the stock account. This is basically the stock account. Let's go back. And then we look at note 21. What comprises that figure? Okay, let's rotate our device to see more. All right. Now that 4364 is basically coming from the bank account and nowhere else. And remember, this is supposed to be a small illustration where we can't afford to include a lot of transactions. So let's go back. Now, the 477 comes from the cash account. We have only one cash account anyway. We have only one cash account, and that is the 477, although we haven't reconciled this. Now, this blue box means we should type in a figure, and I think we need to do it now. So we need to confirm that the closing cash balance is 477. We're supposed to confirm that. If there's any difference as far as cash is concerned, whoever is in charge of cash really should put in the difference. So we should have a zero difference to investigate. Okay, now let's go back. Let's go back, and now we're going to this 30. There's only one outstanding creditors. Let's look at 24, and that outstanding creditor is telephone. And this is a self-reconciling account. Self-reconciling, we don't need to do anything. And then we go back to this 3724. Like we mentioned, it's a sum. It's a sum of 844 and the 2880 owed for tax, giving us 3724 on the balance sheet. So let's go back. And then we look at the 340. What is the 340? Where is it coming from? It's all coming from loan 1. That's where it's coming from. And then we scroll down. Let's see. Scroll down. We've got capital brought forward. This is the opening capital at the start of the financial year. This is the capital added of 400, was the very first transaction recorded. And then this is the net profit. It's coming from the profit and loss account. You can look back and confirm that. And you remember we also recorded the amount owed for tax. Now the net equity change. Let's start at the top here, how these computations are done. Dear, let's ignore these ratios up there. For the sake of simplicity, let's ignore the ratios up there for the sake of simplicity. Now, these two columns are for the most recent year, and this one is for the previous year. You remember we did record the previous year balances for comparison purposes. Okay, now what happens is fixed assets are up there. They should be added, and we end up with total fixed assets. Then we have current assets, which should be added to give us total current assets. Now, below here, we've got current liabilities. Now, these current liabilities are individually deducted from the total current assets to give us the net current assets. You can either deduct them individually or you deduct that total from that to get the net current assets. Now, net current assets should be added to total fixed assets to give us total assets less current liabilities, which is equal to capital employed, which is equal to capital employed in the business. Now, below here, we've got long-term liabilities. We've got a loan of 340. So capital employed minus that loan gives us the net business assets. This is the value of assets owned by the business. Net business assets. And apparently it should be equal to the closing capital. Should be equal to the closing capital. Now, how do we get to the closing capital? We've got the capital brought forward of 2,324. We've got the capital added of 400 plus the net profit minus tax for the year and minus drawings. So out of the monies received, the profit made, the tax paid, and the drawings, there is a negative figure of 7720. Now, apparently, this is because the profit is smaller. The profit and capital added are smaller than the tax and drawings. And the difference is 7720. Now, this 7720 reduces the capital brought forward from 2,324 to only 2,246.8. So the closing capital after the end of all business activity in that financial year is 2,246, which is equal to the net business assets. Now we are saying the assets, the net business assets, is what belongs to the owner in form of closing capital. So that is it about the balance sheet. Now what we need to look at is, now we've looked at individual notes to the trial balance. So we need to look at the joint notes to the balance sheet that we would print out to support the balance sheet before anybody goes to those individual notes. So we need to go back to this checklist. And now we need the notes to financial statements. We're going to leave out B3 performance ratios. Ideally, those are displayed at the top of the financial statements. That is the profit and loss account and the balance sheet. Now we're looking at the notes to financial statements. The joint notes they should be from notes 1 up to note 30. As mentioned earlier, notes 1 up to 16 are for the profit and loss account. Now, apparently, most of them are not there because there are no balances on them. We didn't engage them at all because this is a simple recording module. where all expenses are recorded on account 25 and all incomes are recorded on account 5. Now, this opening stock and closing stock were just for simple demonstration purposes. So it's not 17 to 30 that cater for the balance sheet. And then from here, we can see how that figure is generated. You look at the bank account, we go to L2. So we click this L2, it takes us to the summary bank account. And this is the opening balance. These are the total debits, total credits. This is the closing balance, which should agree with the bank statement balance. Ideally, we should have bank statement to agree that. If there's a difference, then we should investigate that. And from here, well, this one's supposed to link to the bank statement, but this one links to the detailed account. And apparently, we've got our bank statement. Let's compare the two. We've got our bank statement, which we used for recording. Let's have a quick look at that one. The balance is 4364. And if we are satisfied that it agrees with that, then we type it in there. So after we type it in there, we should have a zero difference to investigate. So that is 4364.5. 4364.5. Oh, yes, and our difference is a 0. Excellent. That report is now ready for printing. So let's go back. So these are the notes to financial statements, and that is report B4. Now we have looked at, let's see, we have looked at the L reports. We looked at the M, that's the cash account earlier on. Creditors control account. Let's have a quick look at this one. Creditors control account. This is the creditors control account. Now this is self-reconciling. The creditors control account, and we've got a list of outstanding creditors, which is only the telephone. Okay, now let's go back here. Let's see. That was the creditors. This is the loan account. Do we need to look at that? This was the opening balance. What is this? 440. 440 was the previous year closing balance. And there's a difference of 100, which effectively was paid. And then this is the credit card. We have a closing balance of 844. The opening balance was that difference of 729. And the closing balance has increased by 633% from 115. We've got the tax outstanding of 2880. Remember, we had a quick look at this one. The opening tax, let's see, the opening tax was 3410, which was paid, and the closing tax is 2880. Okay, let's go back and we scroll down. Let's see, this is T2, capital brought forward 2324, closing balance, and closing at the end of the previous financial was 1184. And that's an increase of 1,100, which is about 100% increase. Capital added the previous year was 0 and this year was 400. The unpaid tax outstanding is 2880.7. The unpaid tax previous year was 3410. And then below here we've got drawings. So this one, drawings last year was 12,500 and drawings this year is only 12,000. Well, that brings us to the end of this session where we looked at the balance sheet. In case of any questions, please use our contacts. We are able to give you unlimited support.